The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. If you ever want to reach out to me, I'm at 631-647-4694. You can always visit my website for themainstreetcode.com, or you can hear me on Apple Podcasts or Spotify, and go to my website. We have past interviews and all kinds of information. When we talk about our code, we talk about choice, organization, direction, and education. And, I'm thinking of changing that C word in code to communication, because communication, organization, direction, education is so very important in everything we do. I help hundreds of advisors across the United States, whether they be attorneys, accountants, insurance agents, in matters of life insurance, long-term care, disability, and annuity planning. That's where my area of expertise is. I act as a wholesaler to these individuals and an advisor, and checking all sorts of things, whether it's beneficiary designations or other things to help you be successful. And insurance is such an important asset class of everything that we're doing. Today, we're very fortunate to have a CPA with us, Michael Hunt. Would you say hello, Michael?
Hi, everyone. Glad to be here, Neil. Thank you.
Yeah, Michael, I met Michael recently, and Michael is not only a CPA, but he's had a tremendous experience in the investment world, the insurance world, and as a CPA, what a great trusted advisor he is. And we like to work with people who like to work with us. And one of the first things that Michael presented to me was a word that I like to use that I think is vital to everything. And I don't even have to say the word. You can just tell me what the word is.
Trust.
Trust. You want to work with somebody you trust, okay? We've had a lot of market turbulence, and we talk about taking some of it off the table, mitigating your risk, putting it into some fixed annuities. We've been talking about that for weeks. We've also, because interest rates are... Yeah, inflation is high, but you need to keep up with inflation. If you're sitting with money in savings accounts making 1% or CDs making 1%, that there's no way you're going to keep up with inflation. So you need to do some tax deferral. You need to do some growth. Even fixed annuities are paying around 3.5% now, which is well more than you can get in the bank at 2% and pay tax on it. Well more. Tremendous. So we talk about trust and this market turbulence and the inflation and everything that's going on there. There's a problem in that if you're a do-it-yourselfer, you're in trouble. Michael, would you talk about that a little bit?
Sure. One of the things that I always emphasize to my folks is stay within the lane that you're good at and make sure you understand why you're doing what you're doing. So great example that I'll give to folks is if Neil, if you're my doctor and I go to Dr. Neil and I walk in and I say, Dr. Neil, please give me a prescription for a Z-Pak. First question you're going to ask me is why? It may be necessary, it may be the right solution, but how do we know if we don't ask the questions? And through my tax practice and through some of the other advisory work that I do, I find sometimes people try to solve a problem with a solution without really understanding what the goal is. It's almost the equivalent of having the best hammer in the toolbox, but trying to use that to solve every problem. Sometimes people need a screwdriver. Sometimes people need a wrench.
Right.
So where we work to develop trust with folks is to understand someone's situation and try and provide the best options so that we can partner up with our end clients to get to the best solution, but also make it so that it's nimble enough so that if we do hit unexpected pockets of volatility, inflation, life events, we can pivot with them to maintain the track to the same goal.
Fantastic. And it's so absolutely right. One of the things I've spoken about in the past, and I like to reiterate to people, is there's a lot of advertisements online for term insurance is this, buy this insurance. Well, there's a big problem if you're buying your insurance products online. One of the biggest issues is they're not convertible, or they may not be of your best interest, or you may have a health situation, and they could actually hurt your insurability by doing it that way, by not going to somebody that you trust, who's going to guide you with what's the right product. And the biggest thing is, even if you're buying term insurance, if that's what your need is, that short-term need for a lot of insurance, because you have young kids and college and retirement and premature, you're concerned about all that, which I advocate. But even if you're buying that, you want to make sure that policy is convertible, or it can go to certain things. And even as recent as this year, you have several companies that have left the state of New York. So if you bought in the past 5 years a MetLife policy, a Prudential term policy, a William Penn policy, what are you able, an ING policy? If you're sitting with this term and you think this is your plan, well, I'll convert it later because the guy told me I can convert it in my current health. Well, you're going to find that you can't convert it, or it's a product that's so expensive and out of touch that it's not worth it for you. And these companies coming online right now they're selling you cars without wheels. Right? Wouldn't you say that?
Yeah, I agree with that, Neil. And I think the way I'd like to put it in an analogy that I think most people can understand, most people go to their doctors once a year. Why? Because they want to make sure that they can identify issues that need to be focused on before it becomes problematic. Same thing with cars. In New York State, people need to get inspections on their vehicles.
I have to correct you. I think I've written about this. I think people know their mechanic better than they know their doctor. What do you think about that?
Absolutely. Some do.
Isn't that crazy?
It's nuts. And why people do this is to try and identify a situation that can become problematic before it becomes problematic. So if folks are going to focus on their health or their vehicle, that's really important to them. Shouldn't understanding your financial health be a close second?
100%.
And that's why we do what we do.
Right. The other thing that's happened is, and Michael's a CPA, and I got to tell you something. If you're relying on Quicken, the laws are changing like that. And Quicken is not going to tell you, or one of these online services, unless you have a very basic need for a tax return. You work for a company, you have no deductions, you have no heirs, you have no dependents, you have no this, no that. Quicken is not like sitting with Michael to get your taxes done. You want to sit with somebody who can maximize your return so that you either get the best money back or protect your money terrifically. And this all works hand in hand with an insurance advisor who's going to advise you on the right type of insurance, how much insurance, and not somebody on the phone that you've never met. Last but not least, if you run into a problem, I don't care if you bought disability insurance, long-term care insurance, car insurance, homeowner's insurance, tax return, and something goes wrong, and you're buying the cheapest thing you could find, who are you going to call?
Exactly.
Who are you going to call? Ghostbusters, right?
Exactly. It's funny. I was just thinking the same thing. And there are too many folks that don't rely on the expertise of the professionals they deal with, whether it's their mechanic, their doctor, their attorney. And folks like myself, folks like you, we rely heavily on the experts in all of our folks' lives, whether it be their attorney, whether it be their CPA, whether it be their financial advisor. We all need to work in connection with each other for the betterment of our folks.
Correct.
And I think the folks that do that successfully truly see the benefit. And as we get further down the road, people want to deal with less folks. And that's
Michael, how can they get a hold of you if they want to get a hold of you?
Certainly. Two ways. My website, www.huntcpapc.com, or 516-761-1684.
And you're listening to the Main Street Code for Financial Success, and I can always be reached at 631-647-4694 or themainstreetcode.com. We're going to be right back in a few minutes with Michael Hunt. Don't go anywhere, and we'll see you in a few. Thank you. Welcome back. You're listening to the Main Street Code for Financial Success. Welcome back from the break. And with me, I have Michael Hunt, a CPA and financial advisor. We were talking about working with experts. And one of the things that I talk about very frequently, and I want to emphasize it today, is you need to build your financial team. You need to have that one person you trust or your team that you trust for all of your finance, and it's got to be your team. And if you don't have a team, reach out to us and we'll help put together a team that's particular for you. And one of the things that people tend to do is they're watching a lot of I call them the bobbleheads on TV, and they're listening to this one and listening to that one, and they're giving you generic advice, and it doesn't apply to you. Your plan should be your plan, not some plan that you hear on TV that somebody else is doing in who knows where. It's got to be particular to you. And particularly if you live in the state of New York, there are very particular tax laws that may be different. There may be insurance products that are different. So you need to talk to professionals, and you need to have somebody, if something goes wrong, who you're going to pick up the phone and call. Now, besides Michael being an excellent CPA and financial advisor, he believes in this whole method of understanding not only your investment should be diversified in different things, because if you are one of the young bucks like my kids that are on Robinhood and all these investment platforms and buying tech, you had a very bad week. Why? Because you're not diversified. Or you've been buying blue chips and all of a sudden all these are down and you're older and you can't pivot because all your eggs are in one basket because you're not diversified. But one of the other things we talk about in diversified, and when you sit with a financial planner, a good one, he's going to do a fact find. He's going to find out what your risk tolerance is, what you want. He wants to find out and be open with somebody. You have to have somebody you trust. They want to find out what your interests are, what your goals are, what your objectives are, what you're trying to do in your life. That's what's important. It's not about what somebody else in Ohio is doing or Florida or wherever they're doing, or your cousin or it's about you. And you want to include your family in this type of planning. But one of the things that I like to talk about, is diversifying your tax classes in your investing. And some things are tax deferred, some things are tax free, some things are death benefit. Now, one of the great products that we represent and use is life insurance that people don't understand. You can put unlimited and flexible contributions into a life insurance contract. The money will grow tax deferred. You can take it out tax-free over and above, and it has a component called life insurance, which has a tax-free death benefit. And to top it all off, if you're in business or even personally, it's credit shelter proof, and that's humongous. And I was talking to Michael earlier this week, and we talked about income tax flows at retirement. And this is why you have to plan well in advance. And can you talk about Medicare and Social Security and how this all comes into play later in life?
Sure. So we all will get on Medicare at some point. That's a requirement. Medicare is the government-sponsored healthcare plan that we all qualify for at age 65. We are encouraged to sign up for it at either 3 months either side of age 65, and that's how we get enrolled in the plan. We may still be working. That's okay. To get your Social Security payment, you must be enrolled in Medicare. It's a requirement. The thing that most folks don't understand is that Medicare now is what's called means tested. The more taxable income you have in retirement, the more your Medicare premium could cost you. And as you make more, the Medicare premium goes up, and it's going to go up nowhere near as much as the COLA or the cost of living adjustment for Social Security. So we encourage folks to sit down with your tax professional, your financial advisor, to understand what this could mean for you in the future, because it could mean hundreds of thousands of dollars of lost income or taxes in retirement. Doesn't mean that, there's no perfect cookie cutter solution for everyone.
Right.
That's why it's so important to identify what's appropriate for you.
But as you're saving, we've been taught by the government, by a lot of planners, put as much money in your 401k as possible. The accountants love it. Oh, you're deducting money, IRA, just load it. Then they came out with a thing called a Roth IRA, which we like better, by the way, because it doesn't have those long-term implications, because you could take the money out tax-free later, correct?
Correct. As long as it sits in a Roth IRA account for a minimum of 5 years, all withdrawals are tax-free.
Right. And it doesn't affect your income levels.
In retirement, correct.
That is huge. So you can say, because the way the models that you showed me, which just blew me away, that actually your Social Security could be completely eaten up, if you're wealthy, by your Medicare costs in the future.
It's possible, correct.
There's this inverse yield curve that just blew me the frig away. I'll be honest with you. It just blew my mind. It blew my mind. And I never looked at it that way. I'm going to be candid with you. I talk about this, and conceptually I've known it all along, but I didn't realize the effect on Medicare and Social Security. That was new to me. That was great.
And just to follow up on one of your comments, Neil, IRAs and 401ks and 403bs, they're good. The question is, for each individual, how do you maximize your potential stream in the future?
Agreed.
I always will sit with folks and I'll say, in retirement, you're going to have a taxable portion, a potentially partially taxable portion, and a tax-free portion if set up correctly. Which would you prefer? And guess which one most people jump on immediately?
I agree. And I like to say, if you think you're going to pay more taxes in the future or less taxes in the future, and I'd say 100% tell me, oh, I'm going to pay more taxes in the future. But the government is saying you're going to pay less taxes in the future when you're retired. That's why you're doing this. But the real truth is you're going to pay more taxes and you're going to have more assets. So you're going to take a bigger chunk of what you have, unless you think about not just tax deductions today, what's going to be tax-free later. I compare it to a whole nother thing, too, that I've done during the years. And we're going to talk about another product besides Roth IRAs and IRAs. But I compare it to paying bills. And some people have a notebook method, and some people have an envelope method. What do I mean? They have another day, it's automatic, and then they have this envelope now. Well, I'll pay this one, then this one. But, when you pay your bills after you're retired, and maybe your regular income stops, unless you do some right planning, do you want to pay it with your taxable money or your tax-free money? Wouldn't it be nice to have the choice to say, what bucket of money am I going to pay this bill with?
Exactly.
Wouldn't that be cool?
And just not to get too technical or into the weeds, but as we retire, all of the funds that we've set aside for retirement, the amount that the government requires us to take into taxable income goes up every year.
Every year. So these are things to think about. And there's one product besides a Roth IRA and life, and I have to say it again, is life insurance. You construct it in such a way that we actually try and not put too much money towards the death benefit, but towards your income, towards your money that you can take out tax-free later, in addition to having a tax-free death benefit. And if it's inside a trust, an estate tax-free death benefit, wow, there's nothing else like it. And you can stop making payments or make payments later. You have a lot of flexibility. So that's kind of what I love about life insurance. I love Roth IRAs, great compliment. Love 401ks, especially when I have a company that's contributing money in addition to mine. Don't knock it, but these are all great tools, but they have to be integrated, and you have to sit with a great planner who's going to help you balance everything out and diversify. You're listening to the Main Street Code for Financial Success. Our guest, Michael, thank you. You were terrific.
Thank you, Neil.
What's your phone number?
Again, 516-761-1684. Or on the web, www.huntcpapc.com.
And you can reach me for any questions anytime at 631-647-4694 or visit me, themainstreetcode.com. Thank you. Have a lovely day, everybody. Have a terrific weekend. It's going to be a hot one.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.